In this video, I'm going to show you guys exactly how to identify a break of structure, which is often referred to as a BOS or a BOS. Okay, so starting things off here, this is Euro USD. It is on the 15-minute time frame, but to be honest, structure, breaks of structure, it all works the same on all different time frames. Okay, so as you can see here, I just want to get straight into this. So you can see here we have a push to the upside followed by a 2-candle pullback. Okay, so we have a push to the upside followed by a pullback. We then have a strong push to the upside. Okay, this push to the upside breaks above the most recent high here. Okay, so we have a push, a pullback, and a strong push to the upside. The reason why this is strong is because there's no bearish candles leading within the break. So, you know, it's just 2 consecutive bullish strong candles pushing to the upside. Okay, if we seen a bearish candle within the break, that would indicate, you know, that this isn't too strong of a break. And I'm going to touch on that a little bit later on in this video. Okay, so we have a strong push to the upside. Therefore, we can identify this as a BOS to the upside. Okay, so we understand that we've broke structure at the upside. Our directional bias is now to the long side. So therefore, we're looking for buys only on this trade. I'm not going to talk too much about the entry schematic, more so just about the basics here with the breaks of structure. Okay, we would then look for a pullback into our area of extreme supply. As I said, not going to go into too much detail. Once we've seen the break, we can then mark on our guarded low. And what the guarded low is our invalidation level. Okay, so if price starts to close below our guarded low, this would indicate that our buy bias is incorrect, and therefore we would not be looking for any long trades in this market. Okay, so price has to stay above our guarded low. We would look for a pullback, we would look for our entry schematic, and then we would look for a long trade. Okay, so that's how to ensure that you're trading with the banks, you're trading with the institutions, you have the correct directional bias, and it lines up with the higher time frame. Okay, so that's a break of structure to the upside. Okay, I just want to touch on a break of structure to the downside, and then I'll walk you guys through a break of structure which isn't strong and it's not something that we want to be trading off of. Okay, so you can see here, let's zoom in a little bit. Okay, so we have a push to the downside followed by a small correction to the upside. Okay, so we have our low, we have a correction, we want to see a strong break to the downside. Okay, and that's exactly what we get. So we have a pullback, a strong break to the downside. Why is this strong? Because these are all bearish candles. There's no indication that buyers are even sort of present within this market. Okay, so a strong move to the downside, we can mark on our BOS to the downside. We can then mark on our guarded high. This is our invalidation level. We don't want to see price close above here. This would invalidate our sell bias. Okay, so now that we have a directional bias, okay, we've got a break to the downside. We want to see a correction within this area. So we want to see a pullback, a correction within this area. As I said, I'm not going to talk too much about the entry schematic, and then we're going to look for a sell trade. Okay, so we have our directional bias identified, we see a pullback, etc., and then we see another break. Okay, so I'm just going to play this on a little bit more so I can show you guys an example on what we don't want to see. Okay, so I'm just going to remove all the drawings here. So we can see we have a low in the market, we have a pullback, and yes, we do break to the downside. So technically speaking, this is a break of structure to the downside. So we can mark that on, break of structure to the downside. We can mark on our guarded low. This is the most recent lower high before the break of structure. Okay, and the reason why this is not a valid and, well, technically it's valid, but it's not something that I want to be trading off, and that is due to momentum. And what I mean by that is you can see the break here. Within this break, you can see these bullish candles to the upside. So this indicates that there's not a strong conviction and that the sellers are not fully in control of this market. So if these bullish candles here were bearish, then yes, this would be a valid break. Okay, we want to be trading a trend following strategy only when we know who is fully in control. And as of sort of in this market, it's not entirely sure. Okay, we have sellers step in, some buyers step in, sellers, buyers, sellers. It's inconsistent, right? So this is not what we want to see. If you compare this to this break here, so this strong break to the downside here, you can see the momentum. Strong break to the downside. Okay, compare this here with this here. You can see the conviction isn't there. Okay, you can see the small bar, you can see the bullish candles within. So if you compare these side by side, you can see the difference. This is what we want to be trading with momentum, with a trend following strategy. This is not what we want to be trading. Okay, if we play this on, let's play this on here. You can ultimately see that our guarded high here was broken. So our guarded high. And this trade ultimately wouldn't have played out. So it's very important to look at these small details when you're trading momentum, when you're trading with institutions, with the banks, you know, to make sure that you give yourself the greatest probability of success when trend following. Okay, so I hope you guys enjoyed this one. Please like, comment and subscribe for more videos like this. In future videos, I am going to touch on my exact strategy, the entry schematic, and piece everything together. Okay, but in this one, I just wanted to touch on break of structure and the basics behind that. Okay, thanks for tuning in, guys, and I'll see you guys in the next one. Take care.